The Agweek Market Wrap is sponsored by Gateway Building Systems.
Welcome to the Agweek Market Wrap-Up, brought to you by Gateway Building Systems. I'm Don Wick, farm broadcaster with the Red River Farm Network, and we're joined by Randy Martinson, president with Martinson Ag Risk Management. Randy, we ended the week with Minneapolis wheat down 1-2 cents, new crop corn gained 3-4 cents, and we saw some bigger losses, double-digit losses in soybeans. And of course, at the end of the week, we had the supply-demand numbers out from USDA. What's your takeaway when you look at that report?
You know, the report looked like it was going to be, well, it did turn out to be a little bit negative on the wheat side. The old crop, it was friendly as it came in, and we didn't see a decrease in exports, what a lot of traders were expecting. So that was a little friendly to the old crop side of things. New crop, we didn't see, I mean, it was kind of a neutral report, I guess, for wheat. I mean, it really didn't change a lot. For corn, it was a little negative all the way around, as even we saw exports dropped, and that followed all the way through to decrease or increase stocks in both old crop and new crop. And then when you look at it for soybeans, it was a little friendly because we did see the decrease or the increase in exports for old crop, and that followed through to decrease stocks in both old crop and new crop. So when you look at it as far as the U.S. numbers, I think, you know, for wheat, it was kind of a non-event, but for corn, it might have been a little bit negative, even though we did see corn finish Friday with gains. I think it was more weather related. And then with beans, I think, you know, we just got good demand and strong basis levels, and that's what's driving the beans.
You look at some of those international numbers. Obviously, we are paying a lot of attention to that Black Sea region. I was interested to see Russia. They increased wheat production by, I think, 1 million tons. They increased exports up to 40 million. That'd be the second highest on record. Does that jive with the current situation we're seeing in that region?
Not really. And they also came in and they increased Ukraine corn production by 5.5 million metric tons. So, you know, I'd say that they maybe jumped to the conclusion of cutting things too much last month. This was kind of a true up. I still think we're going to see some adjustments going forward, but I think it's not going to be these numbers. I do expect to see some lower numbers to come into play. So
how does this report compare to what we'll be seeing later this month with the acreage report at June 30th?
Well, that's basically where we'll see the true up with acres. We'll see what was planted, or at least we'll get as close to what could have been planted. So we'll actually see some production numbers change in the next report. Likely we could see a little bit of yield changes as well. I don't know if we'll see much on the demand side. Again, you will sort through the wheat issue a little bit more as we go through another month, and we'll see if USDA will leave the old crop wheat exports unchanged. I don't expect them to change much as far as the new crop demand side of things moving forward until we get into probably July or August.
Randy, as we take a look at getting that crop in the ground, certainly in our region, you know, our growers have been farming around those potholes, but they've been getting a crop in, I think, over the last couple of weeks anyway. There's certainly some acres that won't get done, but they've been working at it pretty hard. Do you think we've seen any shifts, though, in what's put in the ground, any shift away from corn or wheat?
You know, I do. I think we have seen, you know, everybody that I've talked to, you know, was hoping to get a few more acres of wheat put in, a few more acres of corn. But I think they got to, you know, when planting started, they were able to get onto the fields that they could. They planted what they could in those crops. And I do think we're going to see a few more beans come into play. Some of the later season crops, I know sunflowers are going to take an increase in acres. Dryable beans will probably see a little bit lower per acres, I think, because of the wet conditions. But I do think wheat acres and corn acres are also going to see a trimming. As far as North Dakota, Minnesota, South Dakota is concerned. Now, as far as the world, the U.S., the rest of the U.S., the Corn Belt, you know, they had decent planting. We could see an increase in those areas.
In fact, that weather may play a part of that. Looks like some pretty warm temperatures coming into play here in the week or two ahead.
Next 11 days, I believe, is forecast for Illinois to see 90 plus degrees every day. That's warm for this time frame. And normally, you know, one of the things that some agronomists were pointing out to me this morning, normally that corn is canopied by now, so it's usually not as much of a threat. Right now, it's not. It's still very much in the, you know, small growth stage, so it could dry out the fields and it could create a little problems going forward. I do know, you know, if you look at some of the other weather forecasts out there, the European Union weather model is calling for 30 days of above normal temps and below normal precip for the Corn Belt. So it's going to be an interesting, you know, the next couple months are going to be interesting.
On the global stage, United Nations certainly worried about food security issues. They've been trying to get something done so that they could open up those Ukrainian ports. They've been talking with Russia. It seemed like that was a big news story this week, trying to open up some kind of channel that we could be able to move at least some food or grain exports out of like the port of Odessa. But then at the same time, we saw Russia blowing up a major grain storage facility. It kind of loses a little bit of credibility there, I'm guessing.
Oh, very much so. And, not having Ukraine invited to talk, with these talks as well, makes you wonder a little bit about how things are going. So, yeah, Russia, to me, seems to be pushing a little extra hard to get these ports opened up. And I do know that they're looking for some sanction reduction and seeing sanctions lifted. And I think that's their big driving factor right now.
Also, at the end of the week, we saw the consumer price index come out. It certainly sent the Dow lower. We know what's been going on with the energy prices, with crude still pushing in around that 120 per barrel mark. What's all of this mean for monetary policy as we move forward?
Well, it means that it's likely that the Fed is going to increase interest rates again, probably 0.5 point in the next report or in their next meeting. So that's going to continue to take a little bit more of a bite out of the consumer, the discretionary income that's left. So that in the long run kind of tightens up the amount of money that's going to be spent to go out to eat, to go, buy some of the higher priced protein sources. So in the long run, it could start trimming some of our, or continue to hold down the demand domestically for beef and pork. Exports continue to be strong, and we are starting to see a little bit of, I think, tighter supplies or tighter production numbers. So that should be friendly going forward, but it's going to cause a little trouble. It's a little less spending from the consumer.
We did see higher cash prices in the cattle market this week. There has obviously been a lot of liquidation going on in this cow herd. Long term, that's got to be positive to this cattle market, doesn't it?
It almost definitely. We're seeing about the cow slaughter numbers running about 15% above last year at this time. We're also seeing more heifers going into the feedlots, which means that they're not coming back into the breeding herd. So yeah, we're seeing a dramatic cut as far as the potential breeding herd size is moving forward, which should bring some long-term or longer-term support to the cattle markets.
Anything else you're going to be looking at as we get into this week ahead?
I think the big thing is watch weather now. I mean, we got this June report out of the way. It's going to become a weather market. We look like we're going to see some warmer, drier weather, which will likely wrap up a lot of harvest or a lot of planting progress here in the next week. So yeah, I think right now weather and growing conditions are going to be the big driver.
Good deal. Randy, thanks for joining us.
Thank you.
Randy Martinson, president of Martinson Ag Risk Management. Again, keep in mind for markets and market analysis, you can turn into your local Red River Farm Network radio affiliate, or you can find it at rrfn.com. The Agweek Market Wrap, it is sponsored by Gateway Building Systems. I'm Don Wick.